So here is question 1, August 2025. So explain. Let me read together. Let us read together. So it says, explain 3 requirements that must be met for government grants to be recognized in financial statement in the context of International Accounting Standard IS 20. Again, this is a typical CASNEP. This was under IS 20. Currently, there is IPSAS 23, which was again replaced by IPSAS 47 revenue. By IPSAS 47 revenue. 3 requirements that must be met. 3 requirements that must be met. 3 requirements that must be met for government grants to be recognized in the financial statements in the of context of public in the context of International Accounting Standard 20. So we look at 2 things or even 3 things when you're looking at this question. We look at the condition. Is there any condition attached to it? Is there any condition attached to it? So when we recognize a revenue from a grant, we'll check and look at it. Is there a condition attached to it? That's why we have IPSAS 47 and 48. Is there a condition? So for you to recognize, you must comply with the conditions attached to the grant. Like if someone has signed you an approval letter, that's not enough. If the person who received will not satisfy those conditions attached to it. For example, if you are told, take this money, I'm giving you this money to build a library. If you have not built the library, then you can recognize as revenue. If a ministry controlled training agency receives a grant on condition that it trains 2,000 officers, for example, and it has not trained, then they will not recognize as revenue. But once they train, they will recognize. So you comply with the conditions. Then the second one is you receive the grant. Like, even if you complied with the conditions and you won't receive, there's no assurance, there's no legal or constructive means that you will receive the grant, then it won't help you. You can't recognize as revenue. So there must be a reasonable assurance that the grant will be received. So the entity cannot recognize income merely because of sometimes what you call political promises or informal promise, a formal approval, a binding arrangement, an evidence that the payer can and will transfer the resource, like that person will transfer the resource to you, must be there. So comply with the conditions and receive the grant. So finally, as you fulfill those conditions, you recognize the revenue systematically. So match the grant income to the periods of related cost. So when you handle a question like this, first, what do you debit? What do you debit? What do you credit? What do we debit? What do we credit in our books? What do we debit? So we credit deferred income first. We credit deferred income and debit our bank since we received the money. If you have not received the money, we debit receivable. We debit receivable. That is once you know. But then how can I tell that I will know this? I will recognize in our books. For example, in the public sector, we normally prepare our financial statements by August. So by August, you will know that if you will receive this money or not. If you have not received July, if you have not received August, then there's no way you can recognize that. There's no way you can recognize that as revenue in your books. as revenue in, sorry, I don't know what I did. Yes, as revenue in your books. Okay, so you recognize as you fulfill that condition. For example, you are given money for the library. You first recognize, you first recognize you have built the foundation. So recognize the foundation. So reduce the liability, the deferred income liability, recognize the asset in your books, the asset in your books. Okay, so let us go to the next one. So we are told explain the following terms as used in the context of public sector accounting. Explain the following terms as used in the context of the public sector accounting. So, revolving fund. What is revolving fund? Then, what is exchequer? What is revolving fund? What is exchequer? So, revolving fund. What is it? Revolving fund is a fund whose recoveries or receipts return to the fund for reuse. The account through which the consolidated fund is administered. So you hear, I'm waiting money from Exchequer is not received. So the account through which the consolidated fund is administered at the Central Bank of Kenya. The purpose for each one, for revolving fund, is finance a continuing purpose without exhausting the original capital. Okay. The other one, exchequer, receive national and national government money, national and even county government money, and make authorized payments for public services. An example, you have heard of something called Hustler Fund. Hustler Fund, they were given 20 billion, and that is the money they use to service those loans and their self-operating fund. Another example is the mortgages, the mortgage, the car loan, and the mortgage loan, which is normally a revolving fund. Taxes enter the national exchequer account. Lawful withdrawals finance the approved. So, revolving fund is established for continuing purposes and is replenished by the recoveries, repayments, or receipts generated from its operations. While exchequer is the account which we have with the central bank through which the National Treasury administers the consolidated fund. So that question was simple. I know if you work in the public sector, it's easier for you to answer that question. Then finally, we are coming to the last question, the last part of our question. So here, the following summary of receipts and payment was extracted from the records of the Ministry of Finance for the fiscal year ended 30th June 2025. Here we have the receipts. Here we have the receipts, item, internal borrowing, external borrowing, revenue, commercial activities grant from foreign agencies, disposal of assets, other receipts. And then payments, we have defense, health, education, housing, other payments. And we also have actual, original, and final budget. Actual, original, and final budget. If you work in the public sector, you know that we have the original budget, and then after original budget, we have the adjustment. After adjustment, we have the final budget. So in between these two, there is the adjustment and the final budget. Actual is what was actually spent. Actual is what was actually spent. Look at the arrangement. They are trying to confuse someone. So just start with the rearrange. Start with the original, then the adjustment, then the final, then the actual, then the variance, then the percentage variance. You can rearrange this information. So rearrange this information in a way that it makes sense as per IPSAS 24 and the reporting template. So required, prepare a statement of comparison of budget and actual amounts for the fiscal year ended 30th June 2025 in accordance with IPSAS 24. Presentation of budget information in the financial statement, in the financial statement. Okay, so that is a simple question. What happens with this is, that's our table. We start with revenue. Sorry, was the question talking about revenue? No, it was talking about receipts and payment. So we start with our receipts because our budget is cash basis. And the first line is the first line as per the question. So here we had original this, we have final, we have actual. In fact, this question just required to to come up with this table only, to come up with this table. But here I will urge you to always have the adjustment column, to always have the adjustment column uh, here, to always have the adjustment column here, adjustment column here. So next, external borrowing. External, we started with 500, final 460, original was 500, now it is 460, and so there was adjustment. There was adjustment. So in my solution, I didn't add the adjustment, but I don't urge you to do the same. So here, this is the original budget and the final budget. Even if you are given these figures, even if you are given these figures, uh, you are given these figures, just have that adjustment column. Maybe it can fetch more marks, but have that adjustment column, that adjustment column. So this moved from 700 to 500, 460, 2240, 14 to 16. There is increase, there is decrease. So all these come up with that adjustment. Okay, so even though we are given, but then sometimes if the examiner is testing, if you can come up with the adjustment column, then fill that information. Okay, so it is just straightforward. These things is just straightforward. So you will get the receipts, which is a total of this, which is a total of this. Variance is final budget minus actual, 0. 460 minus 300 is 0, this. And then remember, there is also another column, percentage of variance, which we can come up with. So first we normally say this is A, adjustment is B, final budget is C, actual is D, variance is E, then percentage is F. Percentage is normally actual divided by final. Actual divided by final times 100. Otherwise, the rest I will arrange as I display net surplus. And by the way, in the government, what we do, this one, we don't have surplus. We always prepare a balanced budget. We always prepare a balanced budget. So normally you won't see this. You might have figures here and here, which always look alike, but this one we don't normally have such a scenario. Most of our budget are always balanced. So in this question 1, August 2025, question 1C. Anything complicated here? I think it is very simple. Anything complicated here? Anything complicated here? Okay, thank you. Thank you, Hassan. Brenda, you left us and you came back. Sorry for that loss. Yes, Petro, is it Petroline? I sometimes have challenges with your name. Petroline, Petroline, uh, Petroline, Petroline. Thank you for that correction. Brenda, any question? Okay, thank you. So I have also recorded this lesson. Thank you for your time. If I say enjoy your day, in case you meet a challenge, as you do these calculations, you have my number. Please talk to me, and then we see where, if I've gone wrong, where I've gone wrong, or where you went wrong. So thank you for your time and enjoy your day, your weekend. Asante.